The Reserve Bank has been back in the media again this week. This time, it's about the private briefings the RBA hold with financial institutions. It's been reported that Westpac, RBC Capital Markets and Barrenjoey have all been reprimanded by the RBA for leaking the details of these confidential briefings. For more on this, I'm joined by John Simon, Adjunct Fellow at Macquarie University and the former Head of Economic Research at the RBA. John, thanks for your time.
You're welcome.
Why is it important for the RBA to have these private briefings?
Well, I think actually the naming of them as private briefings is actually something that is a bit of a misnomer, because it's as much about hearing from the market as it is for the RBA to brief people there. So I think if you call them private engagement or liaison, I think you get a much better sense of what it's actually about, and that also should make it clearer why it's important that the RBA has these, because it's as much about a two-way flow of information as it is about the RBA speaking to people privately.
How often do they occur?
I've got to say, I don't actually know, and I think that's one of the things that greater transparency about would be really good, because at the moment we've heard about 3, but surely there are more going on than that. But we can't really check. We've got the governor's diary, but we don't have anybody else's diary to know how often this is going on. And look, there's nothing there to hide, so I think transparency would be good in this case. Yeah,
there's been some briefings obviously leaked to the media the past sort of few weeks. I mean, are there any consequences from leaks like this happening?
So I think the consequences when you hear people saying, well, we shouldn't have these at all, is that you then dry up a good source of information for the bank, which is it needs to be able to talk to the markets, get a sense of things, but also to test out hypotheticals, possibilities. And so just because the bank might say, so suppose we were to raise interest rates or lower interest rates, what effect would that have? People shouldn't immediately jump to the conclusion that, oh, they're going to raise interest rates or they're going to lower interest rates, but it's an important part of testing the thinking through the possibilities and what might happen. So I think that's the aspect. And so then if you have the leaks and people say, oh, well, we either need to do this in public, well, the bank's going to clam up.
Yeah.
And they're going to change what they say, and it's going to lose its power as a source of intelligence gathering and engagement.
Well, obviously, one of the new changes this year was the governor doing a press conference after every cash rate decision, and there are obviously 8 of them now throughout the year. And the press conference, I've been to most of them this year, they go for 45 minutes to an hour. What do you think of that level of public engagement?
So I think actually the kind of communications of central banks in general, but the RBA in particular, has been evolving from this, back in the past it was very secretive and heck, they wouldn't even give you an announcement about what they were doing, you'd just have to guess at it. And now we're kind of in this transition area. And I think what we actually need is we need even more transparency. And at the moment we're in this halfway house where the governor's very reticent to say anything because people might jump to the wrong conclusions. But really what we want to hear from the bank is not just what did you do today, but what is your plan? What is your strategy for the future? And it's not about, a commitment, which is the kind of thing that got them in trouble before. It's about talking about, okay, do you have a plan?
Yeah.
And we want to know, you've got a plan, but obviously plans change as circumstances change. So I think what we really want to get to is a discussion about what's your strategy, not just what's your goal, but how are you going to get there?
Yeah, what's your sense right now of how Australia's economy is tracking? Are we still on the narrow path?
Well, I think it's an interesting question. You've heard the rhetoric saying that the path has gotten narrower. Actually, if you look at when this narrow path terminology was first put out, the expectation was that inflation would get back into the target band, well, in May 2022, it was by now.
Yeah.
And that's not happening. And what you notice is they keep pushing out the horizon over which we're going to get back into the target band. And based on their current forecasts, they don't expect to get back into the midpoint of the target, which is actually one of their targets, before the end of the forecast horizon.
I think that's mid-2026, right?
Well, December 2026 is still 2.6%. So, that's the thing is, it's mid-2026 for within the target band, but the midpoint, which is what they should be aiming for, it's even longer than that. And what you notice is it's just been creeping out and creeping out and creeping out. So are we really on that narrow path anymore? I don't know. I think that, that question has to be asked because the path has changed.
Yeah, because you look at other central banks around the world, they're on a different strategy. They obviously raised rates a lot more than the RBA. Do you think the RBA is now becoming a little isolated compared to its global peers?
Well, it has always said it was taking a different path. And I think the question is that, a realistic path? And that's the kind of discussion you want to be having at these press conferences is, what's your strategy? How are you going to get there? Because at the moment, what we've mostly got is this is what we're aiming for. And look, that's great. We're aiming for low inflation, low unemployment. But is the strategy you're pursuing, is the path you're taking actually one that's going to get there? Because we see that other central banks, they went hard at first, and now they've got the runs on the board and they're bringing it back. And so here's an analogy. We all love our cricket. Yeah. And when you're trying to do a run chase, it's prudent practice to try and hit it hard early on so you can get it under control. And then you know that if something untoward happens, you lose a wicket or something like that, you've got that buffer there. But Australia has taken a very different path, and I think it's a very risky path, which is they said, well, we've got to hit this run rate, and so we're just going to go along steadily, steadily, steadily. And that, they might make it, they might be lucky, but it's risky, isn't it?
Very risky. And look, the RBA review obviously happened a couple of years ago now, but one of the big things was to create the Monetary Policy Board and the Management Board. That obviously hasn't happened yet. It's blocked up in Parliament. But what do you make of having an expert Monetary Policy Board?
I think it's a really good thing because there are multiple benefits you get from it. And a lot of people are focused on the expertise of the people on the board in terms of making decisions. But it's as much about them keeping the staff honest and forcing the bank to lift its game. So what you've got people on the board who'll get a briefing and then they can say, actually, I don't think that hangs together. And you really do need to be trained in economics to be able to work out exactly how it hangs together and to ask those really probing questions. And so while they may be, very intelligent in their areas, I think they've actually got more corporate governance experience than they do economics experience. And that means that they're bringing a knife to a gunfight.
And do you think the anonymous votes of board members is a positive thing to put out to the public as well?
Yeah, and I think people have thought that, well, this might just lead to confusion, we've got multiple messages out there. But if you think about what's been happening in the past, what you've got this one message, which is, we're doing this, we're doing this, we're doing this, until sometime, we're doing something different, and everybody's head starts spinning as they say, what happened there? Because they were trying to keep to this solid message rather than having kind of that nuance that the debate is evolving. So one of the ways you can see that the debate evolves is actually you'll see, okay, everybody's kind of agreed in terms of the votes, but then it kind of evolves and you see a few people arguing for a different position, and as that goes on, that gives you actually a bit of a heads up in the market that the balance of probabilities is changing. Whereas if you don't have that, then it's much harder for you to work out when are things going to change, are the balance of probabilities changing with the current system. So I think it would be a good thing because it gives us more information about those possibilities.
John Simon, great to have you on the show.
You're welcome. Thank you.